Hello and happy Monday, November 23rd. I'm Kevin Davitt, part of SIBO's Options Institute, and this is Volatility 411. Now, last week, U.S. equity markets were mostly treading water. Large cap and big tech closed the week slightly lower, while small cap continues to outperform in the month of November. As of recording, the S&P 500 is slightly higher, while big tech is lagging and the Russell 2000 index continues to make new all-time highs. In short, the narrative from last week remains in play this week. 30-day SPX realized volatility numbers remain in the low 20s. 1 month forward vol, as measured by the VIX index, is slightly lower at 23.5. The VIX index is bouncing along the low end of its multi-month range. The VIX index hasn't measured below 20 since late February of this year, so it'll be interesting to see if the index remains elevated from a historical perspective or if it's able to move back into a more typical range in the teens by the end of the year. Now, this is the third Monday in a row where there's been news from Big Pharma about COVID trial efficacy results. Today, AstraZeneca and the University of Oxford published the results for their candidate drug. The combination of a lower first dose and full second dose apparently yielded about 90% efficacy. Manufacturing data was strong this morning as well, but uncertainty remains around the potential for a new stimulus package from Congress. Moving on to VIX options, last week was the first time since the middle of September that VIX calls and puts traded roughly equal volume. Historically, far more VIX calls have traded than puts, but that narrative has been turned in 2020 with persistently high VIX futures levels. And that's something that I'll keep an eye on as the market moves into the holiday season. That's Volatility 411, and thank you for tuning in.